And Leon, let's talk a little bit about what we've just heard this morning from some of the companies like 3M, Caterpillar, and others. It looks like sequentially they're seeing some improvement across geographies, across businesses, but year over year, still some pressure when it comes to trying to get things back on track. How do you think companies are handling the pandemic so far?
Good morning. I think companies are handling it reasonably well. You're starting to see return of earnings here in the third quarter. Our outlook is that you will see gradual improvement going into the fourth quarter and into next year. And hopefully some of the volatility that we've experienced here in the last few months will start to mitigate as we get past the election. So I think people are focused on getting past the election, starting to project their businesses, and starting to get a return to normal in 2021. So our outlook is reasonably positive here right now, obviously tempered by what we may end up seeing in terms of the virus and its containment going into the winter time.
Yeah, most of the companies that we've heard from have not wanted to give too much indication of what they expect the guidance to be because there are so many unknowns. You don't know what's going to happen with COVID. You feel reasonably safe saying, though, that we're going to get back to some better shape in 2021, whether that be COVID kind of dying down, whether that be therapies and vaccines kind of coming on?
I do, Becky, and I think, you're seeing obviously the M&A activity has picked up. The third quarter, I think, at 1.1 trillion, a huge increase over the second quarter. You saw the AMD announcement today. Those are all indicators of confidence. Obviously, people are using their stock as currency at this point in time in many cases, although you are seeing private equity coming back. So whereas people may be uncomfortable giving public guidance, I think what you're seeing is privately people are being able to evaluate acquisitions, project out 2021 and beyond, and begin to act. So we think we'll start to see a resumption of activity based on what I would call reasonable confidence that you can start to project. Certainly not the conversation that we all had on early March, mid-March, a different environment today.
Andrew?
Hey, Leon. It's Andrew here. Wanted to just ask you about what you think the regulatory environment might look like in terms of transactions, either under a Biden administration or a second Trump administration, and how, to the degree that conversation is happening in the boardrooms that you're spending time in, people are calculating and going through that.
Well, firstly, I think in the boardroom in the C-suite, Andrew, they are factoring in effect, a Biden victory at this point in time, simply based on the polling numbers. As such, when they look at the regulatory aspects, I think people think that there will be more cross-border activity. Obviously, people are going to look in cases like energy and other sectors and see whether, in fact, there will be more regulatory constraints. But I think at this point in time, people are looking and saying, whoever wins here, we will have a balanced structure going forward. I don't think they think there's going to be any huge change in terms of regulatory environment at this point in time. But I do think that we will see an uptick in cross-border transactions, no matter who wins, because I think people will be able to project forward exactly how the regulators will evaluate those deals. So I think cross-border will go up, and I think that will be the factor.
Shepard Smith here. Thanks for watching CNBC on YouTube.